Tuesday, May 6th, let's level up. Markets pulled back again today. I think there's just a bit of a buyer strike and taking profits at key technical levels. Obviously, we have the Fed decision on Wednesday, and there's a lot of angst around that. My thinking here is that we had a bond auction today that went fairly well, and a lot of the reason it went well was because the Fed re-upped more, meaning they're slowing their QT. I wouldn't quite say it's QE, but they are slowing the speed at which they're draining the pool and actually plowing some of that money back into bonds, so it's sort of QT light, if you will. I'm also looking at the way the Fed is going to describe the economy. If they're about the tariffs, if they're going to talk about growth. I do fear that we're going to get a downgrade of the economy with regard to the Fed, and then the question is going to be, why aren't they cutting rates yet? I'd like to hear what they have to say about employment. We know it's been stable and steady, and we know that the wage growth has cooled down a little bit, which does give the Fed a little bit of cover. I was looking at the CME index here, where they predict where the Fed is going to do, and it doesn't seem like they're going to be cutting as far as interest rates go until at least July. If there's going to be a change in that, it would come tomorrow. My guess is the Fed is going to say things are okay, but they stand at the ready to act, but they're not really quite there just yet. With regard to the VIX, bit of a bump up today. The bulls will need to get it below 23.76. If the bears can keep it over 24.80, probably can see 28.32 up to 29.57, and maybe even a run high at the 31s if something really bad happens with the Fed tomorrow. After hours, we got some news out of Besant that he is going to be traveling to Switzerland in 2 days to discuss deals with the Swiss, but the Chinese now want to meet with him in Switzerland, and they're going to discuss a deal, and I'm not so sure if people are going to want to be short ahead of that. We did get a pop in the after hours. I'm looking at the futures, and the pop high there was 56.8975, so anything over 56.90 I think is to go for the upside. Similar situation in the Qs. It was 20,133.75. Bulls will need to get over 20,134 for still higher prices. If you look at the SPY, the similar setup there. The apples to apples be 565.06, which was the after hours pop high. The next resistance after that comes in closer to the 200 MA at 573.10 to the 100 MA at 577.12. I do think that that area is probably a good area to offload some risk. If we can't get over there and we do have a plunge lower, I think that there is support between 547.52 and 549.68, and then we'd see. Basically, we would have stalled at the 61.8, at the 563.02. Yeah, we did overshoot it a little bit, but if we can't stay up over the 61.8, we'd likely pull back to the 50% fib. If we do get up over it, we do likely run to those 200 MA area. Qs, obviously similar. After hours pop high was 480. 50. There's some resistance a little bit closer there with the 200 MA at 491.06, but I think if that can clear 493.62 up to 499s to 500-ish area would be the next big resistance, and then I think we'd see, if we keep pulling back, the next big support zone is 466.43 to 471.60. Generally, also, keep an eye on the 100 MA 30-minute with regard to the futures. That was resistance today on the upside. Pullbacks to there I view as viable. As long as they hold back below, all bets are off. With regard to the Fed decision, at 2 p.m. we're going to get the decision. There's usually some type of a spasm there. You could use that 5 or 15-minute range. Anything above it to me is bullish. Anything below it to me is more bearish. Anything inside is more neutral. If you want to trade intra-range, you could use the Fed day VWAP and trade long above it or short below it. I am expecting that this will be an actionable trade going forward for the next several trading days. Always, of course, looking for a look below and fail or a look above and fail, but I do view that as a net positive if we can stay up over the Fed day range. And I think the pullback so far has been a little bit more technical than in real sellers. We are starting to see gold rally a little bit again, which could be a little bit concerning. I think you could use today's candle body low at the 313 to 314-ish area as a stop. Anything below 311.40 to me would be a short. It would not surprise me to see gold ink some new highs and make the run to the 327.53, but to remain bullish and still higher prices, bulls will need to hold 316.65 plus. That is the 2.618. We didn't get down to the 2 times range, but to have still higher prices, you need to stay over that 2.618. It's interesting to me that we linked both the 10 and the 20 MA and both acted as support, so we can assume that will be this again because traders do what works until it doesn't. I often like to use this trick going into the Fed, knowing if gold is going to rally or sell off post-Fed. If silver is leading gold into it, it usually goes higher. If it's lagging, that usually means lower for gold. little back of the envelope trick I've used for years. As far as Bitcoin goes, still acting well. It needs to hold over 96,591, which is the 61.8. If that can clear, we're likely going to make a run up to the 100,000 level. I think if we start losing the 96,591 to 95,705, we could sink back below to 92,403 to 91,455. Keep an eye on interest rates post-Fed. If they start climbing up closer to the 4.5% in the 10-year, it could get problematic for bulls. It can start sinking below 4.25. It starts getting more beneficial. They had a nice reversal today in TLT. I think the bulls there will need to get up over and stay up over at least the 20 MA at 87.95 and the 38.2 of the range at 88.47, which is also roughly the 10 MA. If that can clear, we maybe move back up 89s, 90s, which has been more recent resistance. I do think ultimately we could see a run back to the 200 MA at 92.07 and falling, but the Fed day range for the TLT will be key as well, and keep an eye on that 10-year yield because that is what's going to drive a lot of the algorithmic trading. I think most stocks tomorrow will likely trade in line with the market. Of course, individual situations can happen. The mega cap names have not been acting super well the last couple of sessions, but keep an eye on Apple. That does seem to be getting a little bit of a bid recently. As long as it can hold the 199s to 200 plus, I think it's okay. It starts getting into trouble below the 199s to 196s. I'll be live with you guys tomorrow during the Fed decision. Be sure to tune 30 p.m. We'll discuss real time my analysis of the Fed. If you have friends who want to participate, just tell them to go to my profile and click the subscribe button. Like and follow for more.